Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. That's going to be Andy Swan, co-founder of LikeFolio. Welcome back to the show, Andy.
Thank you for having me.
All right, Fedex. Shares are down about 18% so far this year. Is this a delivery problem? Is this a consumer problem? Or is this a FedEx problem as far as your data goes?
I think it's a little bit of all of the above, but it's mostly a FedEx problem. There's not a whole lot that we see that defines FedEx in a really unique or valuable way to the consumer or to businesses. FedEx went through massive cost cuts, a big reorganization, but we really see them falling behind in the race for last mile dominance. They lost the USPS air cargo contract to UPS. B2B is soft, and we just really think FedEx lacks a clear innovation edge, and you can see it in the data. The LikeFolio data is pretty clear. FedEx website visits, which we really think are extremely predictive of the overall package demand that's going through FedEx, at least on the consumer side, because that's where people are checking their tracking information, checking prices, etc. Those are down 4%. Year over year, which is worse than Amazon at 2%. And I think that's kind of the big story here. The big risk for FedEx is all of these private carriers. Amazon's got its own. Even Target's started to roll out its own. And this just isn't as hard as it used to be. And so FedEx's big innovation leadership, their technological leadership, their logistic leadership has dwindled down to nearly nothing. And so when we look at at web visits, it's just meandering, falling right along with the stock. And we see that continuing because, again, there's no big reason why you would choose FedEx over UPS, over Amazon, etc. It's kind of a price war thing now. Everybody's getting the packages where they need to be on time. And so we just think FedEx is kind of past its prime and is now into the type of company that tries to cut costs. That's how they got their beat in the last earnings call. But that's not really sustainable. You can't cut costs every single quarter. You can do it once. You can become more efficient. But ultimately, without organic growth, this is a company that's just kind of stuck in sideways mode, and we see that continuing for quite some time. There's no catalyst on the horizon that we see for FedEx.
Andy, I couldn't agree more. It seems like everything they're trying, you mentioned the cost reductions, the FedEx One consolidation, spinning off the freight that's going to be done in 26. Nothing seems to be working on this stock. It's got almost the same identical shaped chart as UPS. And Andy, with the direction that the world is going, why can't these firms compete? Is it just these small companies, much like a Nike and the smaller shoe companies? Is our economy becoming a bunch of small companies that turn out they compete with the big companies? Or is it Amazon? And Amazon's willing to innovate and clean up this process. It just has something that can't be beat. I wonder what it is, your thoughts on that, because it looks like, you're right, they're in kind of a Best Buy type of a phase of business where all they can do is become more efficient and headcount and expenses, and that's the only way they beat. If not, the rest of their business just isn't going forward like other businesses are.
Yeah, it's really not. I think it is Amazon, and it is Walmart, and it is Target. Overall mentions online of Amazon shipping now for the first time exceed both FedEx and UPS combined. That's how big Amazon shipping has gotten. If you think about it, it makes sense why it would be difficult for FedEx not to compete. They're very competitive, but it's very difficult for FedEx or UPS to really get ahead, to get huge momentum or gain market share, because unlike Walmart, Target, or Amazon, they don't have the sale of the product itself to help subsidize the shipping. They have to make money on only the shipping, whereas Amazon, Walmart, and Target, they can make money at any point during that entire process from checkout to delivery. And so I think that's the biggest thing holding these companies back, and it will continue to, because it's just, again, it's just not as hard as it used to be, because Amazon figured it out. They figured out that they can compete with UPS, they can compete with FedEx on shipping. So then Walmart and Target knew that they could do the same, and others will follow suit. It's just not as difficult to get items from point A to point B anymore. So therefore, it's not going to be as profitable going forward. It's going to be much more difficult to differentiate yourself. I really can't remember the last time I heard someone say that they had a really strong preference in who ships the package to their door.
Yeah, and I think that's one of the concerns. But on the flip side, Andy, what trends are you guys seeing in the consumer? Because we've seen all these projections that GDP and the economy are slowing. Consumers aren't buying as much as they used to, and that's going to have a negative impact on them. Middle of last year, they were cutting costs. That was helping the stock get back above 300. But is that also, figuring into the weakness that we've seen here in FedEx? And then finally, if you have an earnings score for us.
Yeah, I think when we looked at that chart of, site visits year over year, and even Amazon, the leader, is down 2%, UPS down 12%, FedEx down 4% year over year. There's clearly a weakening in, consumer activity that we see developing. That hurts FedEx more than it hurts anyone else, and UPS. Because Amazon, again, they have that full stack where they can get profits at a lot of different points in that transaction that FedEx and UPS can't. So if we had an earnings score for FedEx, I think that the risk is, it is a low bar, but I think FedEx is going to find a way to get underneath of it. I think we're a little bit bearish going into this one. I don't see much risk of a huge rally on earnings. I think it's just going to be more about what efficiencies they've put in place. Everybody kind of knows that this company's momentum from a demand perspective is stalled.
Yeah. See what type of financial engineering maybe they can do on this report and this call. All right, great stuff. As always, Andy, have a good day.
Thank you, you too.
All right, that's Andy Swan, co-founder of LikeFolio, breaking down FedEx. Kevin, the option market prices in about a plus or minus